Welcome to Fridays with Fintelekt. My guest today is Bharath Vellore, Managing Director APAC for LexisNexis Risk Solutions, and someone I have had the pleasure of knowing for many, many years now. Bharath, welcome to Fridays with Fintelekt.
Thanks, Shirish. It's a pleasure to be here. Thanks for having me.
Great. So, Bharath, at the outset, can you give our audience a quick overview of your own career so far?
Sure. So in my present role, I'm the managing director for the Asia Pacific region for LexisNexis Risk Solutions. But if I just tune it back to where it all started, 10 years ago, I was hired by then a business called Accuity, which was looking to expand operations in Asia. So we had one office in Singapore, out of which they were looking for people to be in Singapore and then reach out to the markets across Asia Pacific. I was tasked with developing the business in South Asia. That started 10 years ago, a different ecosystem then, the regulatory knowledge, the supervision into the markets, the priority that the banks had at that point of time. So went through that phases, grew with the business. We built strong communities in each of the markets that we worked in, and through that growth in the business, have got opportunities to uh, take on different roles. So from there, I then set up the South Asia team. We set up our office in Mumbai. Then from Singapore, we kind of grew to 6 offices across Asia Pacific. So we started up our office in Shanghai, Tokyo, then into Sydney and Hong Kong. So now we have 6 offices, and from a business which just had salespeople at that point of time, now we are 200 plus strong presence in APAC across different functional areas. So working with our customers, not just from a relationship point of view, commercial relationship point of view, but implementing our solutions. We've got a very strong technical implementation and customer support team. We've got our marketing functions here. We've even got a product innovation team here, which I had started up 6 years back to kind of take on new product ideas coming out of Singapore, or out of APAC, sorry. I set up that pod out of Singapore. And for the last 4 years, I've been leading the business in the region. Last year, Accuity merged with our sister business, LexisNexis Risk Solutions. So through the merger, I've been tasked with basically leading the combined business. With that merger, I think we right now have um, a fantastic scale presence in this region, a position of leadership when it comes to providing solutions in the financial crime compliance space, as well as the fraud and digital identity space. So that's a brief background of where it all started and where I am right now.
Excellent. Great, Bharat. So, well, getting on to picking your brains now, there is a growing understanding of how trade is being used as a vehicle for moving illegal money. And, the behavior of criminals, on the other hand, is also becoming very sophisticated in terms of evading the controls that are being put into place by the global community. So, in this whole, let's say, Tom and Jerry game, what are the tangible areas of progress that you see on the financial crime prevention side?
It's a great question, and it's relevant more than ever because one thing this pandemic and then the resultant situation has made us aware is the interconnected world. The world is more interconnected than ever before, and disruptions in one part of the world have an effect, have a ripple effect across uh, other parts of the globe. So it is in this world where trade has now become more important than ever, that we are also seeing the risks becoming more and more prevalent, and also more and more complex. So when we look at from a financial crime compliance point of view at trade, there are different elements of it. One is the sanctions compliance, right? You have the regulators across the world who have sanctions lists where you're not supposed to trade with those counterparties. But then you stretch it out, there is the entire non-proliferation regime that we won't want to have, which means dual-use goods, goods with military purpose. We we want we want to ensure that those don't fall into the wrong hands. So that there is that element, and then expanding it further, trade is also a facilitator for some other crimes. We're talking about human trafficking. We're talking about the thing that's happening around uh, illegal logging of forests. So there are so many other elements to which we now where we we are trying to help make the system better, the entire trade system better. But trade has had its challenges. There's a lot of legacy challenges when you look at trade. One of the first ones is it's a business that is uh, business area that is so paper driven, and during these last 2 years, we've seen, having worked with banks, that we've seen that they have been forced to take bit more risks than they are comfortable with, because information is no longer as easily available as you would normally have access to. And because trade is so paper driven, they had to be limited. As in, we've spoken to banks where they said we are receiving LCs over WhatsApp, right? As in, because yeah, like the flow of information was so paper based, so physical. As soon as it went into pandemic and this got affected, they were they had to find a ways to do business. But while they were doing it, you know that they're also taking up more risks with that. So that's one of the big challenges with trade, is all these legacy issues of being really paper based. There is no single platform through which most of these transactions are done. There's so many different and but that's also to an advantage of trade finance, right? We would want trade to be as open as possible. We would want different kinds of trade finance mechanisms to be available, because that allows SMEs to prosper. Uh, but at the same time, we would want to make it risk free. So it is that kind of complex scenario that we are working with. In terms of progress that we have seen, we've definitely seen a larger awareness around the risks that trade finance come with. We've seen more and more banks and regulators, and then subsequently banks and other financial institutions, which are putting their attention into screening thoroughly their trade transactions. So not so the thinking is going beyond sanctions. They're getting into the proliferation space as well. So we've seen banks screen their goods as well that they're financing, and also the responsibility is moving away from not earlier the entire responsibility and the supervision was focused largely on banks. What we're seeing is that is now becoming much more comprehensive and much wider. We've had kind of a recent example where I think it's relevant for Singapore, where a Singapore company was fined around $31 million. Nordic Maritime was fined around $31 million by BIS, and it just shows that the reach of this US export controls is not just limited to banks, but it's limited to across the sector. So we are seeing freight forwarders now taking compliance very seriously in this space. Cargo companies, so be it sea cargo or air cargo, we've started working with them in ensuring that they're screening their counterparties, they're screening the various entities that are participating in the trade transaction, and they're screening the underlying goods. Um, Another key area that has been developing is tracking of vessel movements, and because that again has been identified as one of those risk indicators which could kind of alert you to do a bit more due diligence on the transaction. So that's again an area we've started working, again not just limited to banks, but we've started work as in even insurance companies, trade insurance companies, export credit insurance firms. They've started working with us to look at doing much more screening and due diligence on those transactions. So there has been a lot of progress. I should not deny that, as an adoption of technology, awareness of risks, all that has happened. But as in, I feel there is a lot more to do and has to happen. And one of the things which is very important is digitization of the entire trade information flow. There's a lot of innovation happening in that space, so I'm quite hopeful.
Right, excellent. I think what you said makes perfect sense, and we also see the responsibility now moving from just banks to so many other sort of related parties, and across the supply chain. So I think very good to know that you're seeing similar stuff. So talking a bit about technology now, Bharat. So you have as you said, been in the AML technology space for many years. And there is now also validation by the FATF that technology will be a vital component for improving both efficiency and effectiveness in the fight against money laundering and terrorist financing. So, what would you regard as some of the areas in which technology can really change the game?
Then now more than ever, I think technology is becoming the, the most important tool in the kit for you to address compliance. Because with increasing digital transactions, what it gives you access to is data, right? There's a lot of data to play with, much more than before now. And having access to that data means you can build on top of that data to then pick up all the risks that you foresee. So data analytics and machine learning, these are some three key elements of where we see technologies being increasingly adopted across in the compliance space. And you picked up you mentioned two key points: explainability, no, effectiveness and efficiency. The other element to that is explainability. So while technology comes in, an expectation from regulators is that don't just bring in technology just because it's the latest and greatest, but understand what it is doing, how you're applying it, and how it is relevant for your processes, your systems, your customer profile. So, and you should be able to then explain what is happening underneath the box, right? As in, so that is a key explanation, because with machine learning and artificial intelligence, uh, technology can be very, very effective, and it could add multiples in terms of your cost saving, in terms of efficiency. But at the same time, it should be explainable. If the regulators come knocking in, you should be able to explain to the regulators that this is how it picked up this as a as a risky transaction or a risky customer, and this is the information that it has used to be able to be able to throw it up as a red flag, and how did it factor in all this various elements of information, and based on that, are you comfortable with the decision that it has been that you're making on top of that. So that explainability is key. So I would say it's the three E's: it's effective, efficiency, and explainability. So we are seeing that in multiple areas that it is being adopted. Uh, we were talking about eKYCs. It's a huge element. It's taken away so much of uh, 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 inefficiency that was in the entire KYC process. From the days before, I remember opening an account, the entire KYC, collecting the information, doing due diligence on top of that information, validating that. Everything used to take in terms of days, if not weeks. And now with bringing in technology to automate all the information collection, quick validation of the information, then bringing in analytics to be able to do due diligence on top of that information, pick up any pick up any risk red flags from that. Um, Through that, we've been able to do now KYC within a matter of minutes, and that's one of the areas we have seen. We're also seeing in the areas or in real-time payments, where technology is playing a huge factor, because we're talking about the ability to process payments in millions of payments, high volume of payments in with low latency. And while these payments are happening in real time, how you technology has come in to ensure that they're still compliant, right? You're still able to screen them, you're still able to pick up risks within those transactions at that high volume, happening at that high speed with such low latency, without any impact on customer experience. Right, customer experience is the buzzword right now. So while you bring in technology, that's one of the areas where it is really benefited the industry a lot. Is you're able to kind of it has given you capabilities uh, to reduce the time taken to comply with regulations without affecting customer experience. In fact, it is actually enhancing customer experience to almost a customer delight. So I think technologies, as I said, it's effectiveness, efficiency, and explainability. These are the three key elements when it comes to compliance, where you bring in technology into compliance space. Just one note on that is that um, we need to recognize and acknowledge that there are two sides of the coin. While we are bringing in technology to comply, I think we also need to acknowledge that the players on the other side who are trying to defraud the system, who are trying to launder proceeds of crime through the financial system, they are also using technology. There have been so many instances, right? Where there are deep fakes. I talked about eKYC and video KYC. Deep fake technology has come in, right? Where you could basically mimic an image to say and whatever you want to. There is high capabilities in terms of 3D screening of face masks, right? So technology is we need to be aware that while we are bringing technology, there is technology is also being used by the other side, and we need to be aware of that when we are working through the risk, addressing the risks.
Absolutely. That sounds very, very insightful, Bharat. In fact, you added the E of explainability. Maybe we should add one more E, which is exploring, right? So you have efficiency, effectiveness, explainability, and exploring. And when I say exploring, what I mean is, all your customers who invest in your technology and software, rather than, for example, using a phone on factory settings, right? Maybe they need to explore even the technology you provide more and not use it just at factory settings, but really see, go deep and find out what it can do for you, for them, and also take your help on that. So
Yeah,
maybe we should add that one more E to the set of E's that we have.
absolutely.
Okay, let's speak a bit about mule accounts.
Hmm.
I think that's something that you're an expert in. So, and also one area that LexisNexis has been focused on, and about mule accounts, the risks that they pose to the financial system globally because really of their reach and sophistication. So, can you speak to the compliance community that is listening in about the extent of the problem and also maybe any findings from any research that LexisNexis may have done on this?
I think mule accounts has been, and it is unique because mule accounts is a use case very typical because it overlays the world of fraud and financial crime, right? Fraud in the sense that the account there is an intent to fraud, intent to hide the actual identity of where the transaction is coming from. At the same time, the purpose most of the times for mule accounts is to launder proceeds of crime through the financial system. So there is an overlay between fraud and financial crime when it comes to mule accounts. And why I've kind of really bring that up as a point is because in most of the organizations, banks and financial institutions, fraud and financial crime are siloed. They don't look at them together, right? Most of the times financial crime compliance is you're doing your watch list screening, you're doing your SARs, and then fraud is a separate solution looking at fraud, and the teams which are looking at fraud and working to address that are different teams. Whereas mule accounts actually would be picked up only if these two come together, or information between these two worlds is flowing in seamlessly, and you're able to then flag up a mule account. So for us, that is where it brings in a risk of a unique kind. So again, in during this last two years, 18 months of the pandemic, we have seen an increase in mule accounts and the fraud that is associated around mule accounts. Here in Singapore itself, we have seen multiple instances of scams which have happened, which have targeted, sometimes willingly, sometimes unwillingly, individuals who have let their uh, accounts being take over and being used to proceed to basically launder crime proceeds. And isn't in terms of where we really see the risks to be addressed, the right way to address those risks is one, around digital identity behaviors, uh, so that you are able to pick up um, the red flag around when an account takeover happens, right? This is very important. But at the same time, while the red flag around account takeover throws up because of the underlying behaviors, which is signaling that this is not the usual behavior of the account holder, original account holder, where you know that this is the usual behavior, what we are seeing is a different kind of behavior. So we call this behavioral biometrics, where you know that the original account owner would have, as soon as they open the app, they tap on the left and then they move in here. Within 2 seconds, they move in here. This is the first section that they would go to. So both unwillingly, when an account takeover happens, either where the party is willingly letting it be takeover, or unwillingly he's kind of it's just through a phishing scam or something, his credentials have been stolen and now another party is using it. You would see then change in that behavior, and then a red flag comes up. Now when the red flag comes up, yes, it's an indicator of possible mule account being used. You would then bring in what you know about that customer, or what you know about the transaction, where the transactions head to kind of then see whether this is a possible money laundering, or whether this is possible sanctions evasion that is happening. So it's about bringing both those systems together, which is key. And this example kind of highlights how you would be able to kind of clearly bring them together.
Right, excellent. I think that's something new I learned today, Bharat. That's behavioral biometrics. So I'm going to look that up. Okay, so Bharat, one of your interviews recently to the media, one you made a comment which said that a year ago we were very focused on banks, but now clients are insurers, casinos, and even real estate companies. And I think you even touched upon that a few minutes earlier in this interview itself, that you're engaging with insurers a lot more. So now, while the FATF is actively engaged in driving the AML CFT agenda to all the stakeholders, what differences do you see in the compliance standards for these different types of reporting entities within the financial system and maybe also outside the financial system, right? The other types of reporting entities. Is the awareness and commitment to AML CFT growing for all these types of reporting entities?
It is growing, but I don't think it is fair for them to be compared with how banks do this. Banks have years of experience of working with these regulations. They have uh, tried, tested, failed, learned, then brought in something else. So there's that years of uh, uh, knowledge and experience that comes, and that's where their maturity with working with these regulations is high, and you cannot compare that to some of these nascent sectors, especially like fintech. Lots of times I see discussions where people compare, oh, banks compliance levels are here, fintechs there's, but let's be fair to them, right? They, that's a nascent industry and it's new. So the awareness would not be the same. The ability to comply and the knowledge of where the risks could be coming from, such risks could be coming from around money laundering or sanctions, uh, might not be at the same level as what banks see within their customers, within their transactions. But the intent is definitely there. What we are seeing is that the intent to comply across these new sectors is increasing. From again, and this is moving at such a rapid pace. I'm just comparing it to 4 years back when we were speaking to sectors outside of banking and insurance. If I take banking and insurance outside, we're talking about capital markets, then we're talking about trade finance companies, so with the freight forwarders, cargo companies, talking about the designated non-financial businesses and persons, DNFBP, where real estate, precious stones, and now into the cryptocurrency space. So all these sectors within the last 4 years, where they were before, where they, as in for them this was something new, this was something that they thought they were not exposed to. They were like, oh, we don't have any money laundering risk. We don't like we would never see that. As in we've never had any issues with that. For them to become aware that yes, their industries have been exposed before, are being exposed today to those. The regulations are valid for them, and then that changes to yes, I need to comply with those. So that change has happened. Is it priority number one? Maybe not. Uh, Again, what banks have gone through is they something which has been at least so far been established is that the scale at which the banks are exposed to these risks is larger. It's not comparable to these sectors. So, with for banks, the regulators, of course, would focus on them more, supervise them more because the scale is much larger than these new nascent sectors. Um, so it's not become absolutely the number one priority for lots of these businesses yet, but the intent is there to comply. And having seen that this has happened only in the 4 years, this kind of from lack of awareness to being aware and then recognizing, acknowledging, and now having the intent to comply. That's happened in 4 years. They will get faster to that kind of maturity stage where they know the use cases that are exposing them to those risks, how to address those use cases, what solutions to put in place. That'll happen much faster. So maybe like we don't have to wait so long for them to be at the same maturity levels as the banks are. And again, I think we have to commend FATF. We have to commend the regulators in a lot of jurisdictions, especially in APAC, for working very closely with these new sectors that are coming under the AML regime. They have created a feedback loop, so it is not just a one-way street that here are the regulations and you have to comply with. We have seen that even with the FATF travel rule, right? They have taken feedback. They've opened it up for feedback from the industry. Uh, Travel rule for virtual asset service providers. I want to be very clear. For that, they've kind of taken feedback. They have in the recent sessions they have kind of said, okay, we're going to review it further until we make it obligatory for the industry. So there is that feedback loop. There is that review where we learn more together. Kind of bringing the community together of these new sectors. So we have to commend that because I think that is essential. We know that this space is not black and white, right? Especially for these new sectors, you have to understand, right? What is the business process of these new businesses that are coming in? Where do then those risks come in? As I said, what use cases expose them to those risks? So that understanding will develop, and you have to work with the regulators, and that is established. So that is one of the highlights I see when I look at some of these new sectors starting to comply more and more with AML regulations.
Right. Thanks, Bharat. So, Bharat, continuing in sort of that stream, you're based in Singapore, which is actually, one of the hubs for fintech and virtual assets. As you said, the regulatory system, ecosystem is very encouraging and actually is being watched and, lauded all over the world. And many times what happens is, we criticize regulators or we try to see what they're getting wrong. But what, according to you, are the regulators getting right? Right? And what lessons do you think can be learned by other countries?
I think to the point that I've earlier made, one of the things that Singapore has done fantastically, especially when working with fintech and cryptocurrency players, is they have created a community. An ecosystem has been established. There's an incubator hub which is set up at ATRR, and you could see that all the fintechs come together, and the regulator is part of that ecosystem. Uh, we have Supnendu here, who is working very closely with them, representing MAS into that. So when they're looking at this sector, they're not just looking at it from distance. They're very much part of the ecosystem, and what that has given is one to the regulator. It has given a very deep understanding of these news of the fintech sector of the cryptocurrency industry, and for the uh, uh, for the industry itself, it has given them that confidence of knowing that I'm working very closely with the regulators, so I will be made aware of what are the risks that are coming up, where do I have to comply, what are the gaps, so they get that confidence as well, that entire sandbox that they've created as well for them to come in. They've created a regulatory sandbox, and it's not just a regulatory sandbox as a PR initiative, it's actually an effective regulatory sandbox. I've seen some of the work that's done there. It's just fantastic, as in there's a lot of hand holding, there's a great feedback loop. And again, they don't go in with uh, black and white. Like something that we've seen with cryptocurrency especially is a lot of regulators have taken a black or white position, right? As in either they're like, okay, it is, you're allowed, and it is the completely hands-off method, or take a, we are banning everything related to cryptocurrency, nothing doing. So I think none of both those approaches are too extreme, and where what we've done with what we've seen with Singapore is that they've stayed close to the industries. They've actually encouraged them to come in, work with the regulatory sandbox. They've got the community together, and only after kind of understanding and staying close with them for so long have they come up with uh, laws and regulations which are specific to those industries. And then Payment Services Act that they've come up with is a great example, right? As in it's only come in last year, right? As so it's not that they've only started working with them last year. As in they've worked with them for a few years, and last year they've brought it in to kind of establish that framework from whatever they've learned, establish the framework to kind of highlight, hey, these are the licensing measures that would involve if you're related to any payment systems or payment service provider. These are the licensing measures. These are the risks that you have to address when it comes to anti-money laundering and counter financing of terrorism. So that I feel is where they really have done fantastic job, and differentiates how they have made a success of working with these new industries.
Great. Bharath, fantastic speaking with you. Thank you so much for joining us. I think I learned many new things today from our conversation. I'm sure the people listening in will also benefit a lot from listening to what you have to say. So thank you so much for joining us today.
Thanks for having me, Sirish. It was great speaking with you.